What's up, millennials? A few weeks ago I added to my ChargePoint position at exactly $20 per share, and that was basically the absolute bottom of the last 6 months. Today I'm going to share with you the reasons for which I bought at $20 per share, and I'm also going to tell you at what exact moment I'm planning to add more to my ChargePoint position. So let's do it! On the 25th of March, I added about 18% to my ChargePoint position at exactly $20 per share. I, of course, notified my Discord premium members. And by the way, if you want to join, you can do so by going to nesami.com/member. And right back then, on the 25th of March, it was my position 8 out of 13. Right now, it is a little bit lower, 9 out of 13. So why did I buy exactly? Well, basically two reasons. First of all, valuation, and secondly, technical analysis. We're going to talk about technical analysis a little bit later on, but let's first very briefly talk about the valuation of ChargePoint at this moment. Currently, the market cap of ChargePoint is about $6.5 billion, and if you maybe have seen the video that I did about ChargePoint a long while ago, on the October 30th of 2020, of course, we see that I had a calculation, a valuation for this company of about $15 on the low end, $24 on the midpoint valuation, and $32 on the high end of the range. So it looks like ChargePoint right now is trading between that low valuation and that midpoint valuation of the video I published back then. So it looks like currently ChargePoint is a little bit undervalued, I would say, but keep in mind that this is definitely a long-term play. It doesn't mean that the price should go up to like $24 or $32 tomorrow or next week, but this can definitely take multiple years to play out. Okay, so now let's get into the chart of the CHPT stock, the ChargePoint stock. As we can see, when I bought on the 25th of March, that was basically the absolute low for the last couple of months, even going all the way back to November 2020 when we did see a few lower prices. Now, one of the first reasons I bought at this level was the so-called mental support level. These mental support levels are always round numbers like $10, $20, $30, $40, $50, etc. Because there are a lot of people who say, well, if the price of this stock goes to like $20 per share, then I'm going to buy more. So what I did is I put in a limit order at $20.20, which in the end got executed at $20 exactly, because of that mental support level. And actually, let's take a look at what the mental support levels have done to ChargePoint so far. First of all, of course, we can see that the $20 level has been quite important, not only on the 25th of March, but also a little bit earlier on the 5th of March, which is a very interesting day we had back then, when we had a massive wick all the way back down, a little bit below that $20 level. But that level was very important because a lot of people were buying at that level, and then the price got all the way back up to about $25 within that same day. And then, of course, on the 25th of March, it went all the way back to that $20 level. We can also see that the $30 level has been important because that created this top over here on the 10th or 11th of March, more or less. And then the $40 level is basically this resistance line over here. And the $50 level is the ultimate all-time high of the ChargePoint stock. So we can see that the mental support levels are definitely very important. The second reason why I bought at that $20 level was because of the wick of March 5th. Now, usually what I do is I look at body closures instead of candle wicks, so I don't really look at wicks too often, but this wick was quite interesting because it got all the way down to $19.50, and that was, of course, a little bit below that mental support level I've just been talking about, but I did believe that that wick was going to be important in the next coming weeks. So basically, that was the second reason why I looked at that wick, which got all the way to 1950, and I thought that people were probably going to buy up ChargePoint stock before $19.50 was hit. And the third reason was bullish divergence on the RSI. Bullish divergence basically means that the price action is making lower lows, whereas the indicator, in this case the RSI, is making higher lows. So as we can see, if we go to the price action, we can see a low over here, a lower low over here, and a lower low over here. But if we go to the RSI, we can see that there were two drives of bullish divergence, of course, a low over here and a higher low over here, but also a low over here and a higher low over here. So that means bullish divergence, price going down, RSI going up. So let's now talk a little bit about the possible future technical analysis. What could the chart do in a few days or in a few weeks' time? Well, first of all, let's talk a little bit about that support level of $20. Because of course, right now we are trading at $21.35 pre-market, and we're getting very close to that mental support level of $20 per share. It's not just mental support right now, because as we just have been talking about, the March 5th low was definitely close to that $20 level too. And on March 25th, when I added to my ChargePoint position, we of course also created a confirmed low at that $20 level. So I'm kind of wondering if we're going to create again a next bottom, a next low right around that level of $20 per share to make a double bottom. We can also see that the RSI right now is in an uptrend, because the RSI, which is this blue line over here, is now making higher lows and higher highs. So we have a low over here, higher low over here, and potentially a higher low coming in the next coming days or even weeks. And we had a high over here and a higher high over here. So that means the RSI is in an uptrend, which is definitely a good sign. And the EMA, which is this white line over here, the exponential moving average on the RSI, is also going to the upside, which is also a good sign. And if we combine the RSI with the price action, I think that there are two scenarios going on, and I think both of those scenarios are actually good scenarios. Let's first of all go back to that price action, because if we're going to not create a lower low compared to the low of the 25th of March, but if we're going to create a higher low, that would mean that we had an uptrend on the price action, because we already have a high in place and a higher high over here. And then we would be making a low over here and a higher low over here. So that's already a positive scenario, a bullish scenario, of course. But also, if we would be making a lower low compared to this low of the 25th of March in the future, then that would also be not very bad, because I think that the RSI is not going to make lower lows instead. So that would mean that there would be another drive of bullish divergence, because that would mean that this would be a low on the RSI, and we would very likely create a higher low on the RSI. And if then the price action is making lower lows, then again we would be talking about bullish divergence. And also, if we very briefly look at the MACD, we can see a potential reversal going on over here. The MACD, the blue line, has crossed the signal line, the orange line, which also is a pretty good sign. And now it seems to be going back to the upside. Now you might wonder, what am I going to do in the future? Well, I've already placed the limit order at $20.20 because of the reasons I've been mentioning in this video. First of all, because of that valuation. I do believe that ChargePoint is very close to being undervalued because of that valuation video I've been showing you, and also because of technical analysis. Now, if we do see a reversal earlier than $20.20, if we don't go back down all the way to that level, then I'm going to also add a little bit more. If we see a reversal, and I'm going to look at candlesticks for that, if we see a candlestick closure above the 8 daily exponential moving average, or if we see a candlestick closure above the previous candlestick, then I'd likely be adding more to my position. Now, do keep in mind that technical analysis doesn't work in 100% of the cases. In the short term, I would be leaning to a little bit more downside to about $20 per share to get to that support level. But longer term, in like the next coming weeks or in the next coming months even, I'm leaning towards upside. I would say, if I would have to put a percentage on it, I'd say likely it is about 70% likely we're going to see upside in the next coming weeks or months. And by the way, if you want to also be able to recharge like me, soon I'm going to launch a course about technical analysis for absolute beginners. In just a few hours, I'm going to explain to you the most powerful indicators in a way that's very easy to understand. So if you want to stay up to date with that and potentially get a little present, you can sign up here at nesami.com/TA. So those are the reasons why I've been adding more to my position and why I'm going to add more soon. Now, I'd like to hear from you as well. Are you going to buy the dip, or are you waiting for lower prices? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!